Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. Uh-oh. Hit the wrong one. Hit the wrong one. There we go. Let me, okay, yeah, now that's better now. That's better. I ain't got that. Yeah. I might have to re-downgrade my Zoom because now what's name giving me just what I want. OBS giving it to me just what I want. Got the 1080p stream. Earlier I was doing the stream with 4K. I was streaming it with 4K, but it had like a crazy delay. And now I'm on my ultra low, and I got like a let me see how many seconds it is. We gonna get to it. Let me turn this around here, and I'm gonna hit it, and I'm gonna see. Let me get it to where I can see it in the screen. There it is. Come on, there it go right there. All right, so here we go. I mean, what are you doing? Here we go. Click. 2 seconds. Like it's like a 3 second. It's like a less than 3 second delay. That's what I'm talking about right there. Yeah, man. All right. Good evening. Now I don't look all chalky. You know what I'm saying? I don't look chalky. I look HD fresh. You know, cause I can't stand using this expensive equipment here, and I was looking chalky. I'll be looking at other people live streams, be like, man, they look crispy. I don't look crispy. But now I'm looking crispy, you feel me? And now, you know, with OBS, I can do other things. I can put stuff on the screen if I want to. I can make it fancy, but I just hate the fact that, you know, I upgraded my Zoom, trying to get the 1080p, you know what I'm saying? So if they give me my 1080p, I'm going to be doing it through the Zoom by itself. Because, you know what I'm saying, I upgraded, and they prorated it because it just renewed in December. So they prorated it, so all I had to do was pay like $50 extra today, $50 and some change, and it's going to renew again in December, right? Instead of being like 180, it's gonna be like 219 for the year. But I don't know. I'll see what I'm gonna do, because I'm liking this right here, looking crispy with my minimal delay. Now, enough of that right there, man. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just be a big spot if you don't hablo español. And you're in tune to another episode of Facilitation February. If you don't know what Facilitation February is, it's when I'm going through my old The Art of Reading Price Action playlist, and I'm going through video by video, and we're watching the video together. I probably should have been on my Instagram like it was to tell people to come over. Trying to get back into, my Instagram. I started out on Instagram. We used to be rocking over there on Instagram, right? But they made me bad, and I left them alone. Let me pin this comment. How y'all doing today, man? How y'all doing today? Who we got up in here? Who we got up in here with me? All right, so we watching the videos, going through them one by one every night, Monday through Friday at 8 p.m. Eastern Standard Time. And if you don't know what the Art of Reading Price Action playlist is, it's my playlist where I go through and I share my understanding of the ICT concepts and break everything down. A lot of people say I break it down very clearly. I break it down in a way that they can understand. But what we're doing, we're going back through those videos, and I'm adding like a deeper dive into the concepts where need be. I'm adding a different take on my understanding of it now, if I got a deeper understanding of the concept, because these videos were made like over a year ago. If I got a better understanding of it, I'm sharing the better understanding. We've learned like some new PD arrays that I interjected in there when we was doing the fair value gap section, when we was talk about suspension blocks and order blocks and stuff like that. Not order blocks, volume imbalances and stuff, because we never had a real lesson on volume imbalances. So just adding extra commentary where needed, adding a better understanding of, a up-to-date, a more up-to-date version of my understanding of the concepts, just to try to help the gang solidify where they are with the ICT concepts, right? And if you have questions, like the only questions that I will entertain is going to be from the gang inside Zoom. I'm not monitoring any chats. I'm not looking at the YouTube chat. I'm not looking at the Zoom chat. You're welcome to converse amongst yourselves in the chat. But if you have questions, unmute at the end of the lesson and ask your questions. If I say something during there, write your question down and unmute at the end. There's the link in the description below to join the Discord. There's no requirement to join the Discord, but that's the only way that you're going to be able to ask a question during the series. Like I said, because I'm not monitoring any chats. Initially, when I first announced it, I said, hey, I'll answer questions in YouTube if you do it via super chat, but I don't want people to feel like it's a money grab and you have to pay me to answer your questions, because you don't. All right. Now, without further ado, shout out to everybody that's in the gang. Before we get started, I will peek at the chat to see who in here. We got Here to Learn and Share. We got Felicia. We got Liquidity 4X. What's up, Stacks Currency? Man, I ain't seen Stacks in a month of Sundays. What's up with you, Stacks? Stacks Currency in the chat. Where my Zoom went? Gang, where y'all at? Where did my Zoom go? Oh, there y'all go. All right. We got Jim up in here. We got G Ferg up in here. We got Yolanda up in here. We got Marco up in here in the chat. We got Rhonda Green up in here. Speaking of Rhonda Green, Rhonda, what's going on? Rhonda, you should have said, hey, what's up, Tim? You gonna plug the book tonight? Shout out Rhonda Green, man. Rhonda Green, one of the gang members. She's a self-published author, right? What y'all call yourself? Authors or writers? What's the correct term, Rhonda? I want to use the correct term. Is it author or writer?
Hey, y'all, I call myself an author.
Self-published author. Her latest work is called Before the Butterflies. She says that, Rhonda, I don't want to do it injustice. Plug your book while I pull up the web page. Tell the people about your book and tell them how to go get it.
Sure. So my book, Before the Butterflies, as well as the other book I've written, 40 Questions Before a First Date, is all about dating. So if you are single and don't want to waste your time and get bamboozled because we too old to waste our time, then go grab a book. They're both available on Amazon as well as on my website. Before the Butterflies is a short PDF, so it's a really quick read to help you in your dating life. And always make sure that they are also tracking with Tim because we want them to be wealthy so they can take care of themselves and we're not taking care of them. That's all.
Yeah. She don't want no scrub. And scrub is a guy that can't. So we got rundagreen.com. If you do slash Before the Butterflies, it takes you straight here. This is her latest work, self-published work. And it's another one up here, say 40 questions before dating. This other work right here, right? Go purchase now, purchase on Amazon. You know what I'm saying? I always like to lead people to the content creators page. You know what I'm saying? Get that traffic over there to their home site. You know what I'm saying? That way, all the money is going to their pocket. They ain't got to do no profit split with nobody. But 40 questions before dating, before the first date, and before the butterflies. Now, I bought Before the Butterflies. I ain't know nothing about the 40 questions before the first date. I didn't know anything about that one, right? I did buy Before Butterflies, but I will go in here now and support the paperback version. It ain't no download like the other one. I will go in here and support this one. Oh, let me move over here. I don't want to dox myself just in case it shows something it ain't supposed to show. All right. Check out. Check out. Oh my God! Ask me for my billing information. I already have a. Do I got an account? Did it make me fill out an account last time? I don't remember it doing
think
this.
it did.
I don't remember it. It ain't nothing saved in
And
there. Let's just see.
Tim, if you hold off, I will put a discount code using the word spider. So give me
Oh, you
until
ain't
the
got to worry about that. You can do that if you want to, but I ain't worried about it. I
Well,
ain't worried
all
about
right,
it.
for everybody else, I'll put the discount code SPIDER. Just give me a moment to set that up for you. And I'll put in Discord that it's working.
All right. Let me see here. I'm trying to see if I did a login or not. I'm trying to see because it's asking me if I didn't. I just go through and put in my information. Why is my thing Oh, probably because I'm streaming. I'm like, why is it dragging? I shouldn't be dragging. I got a beast of a computer now. I got a beast of a computer. Put this on it just in case I dox myself. I don't want to be showing the wrong thing. Put that on camera only. All right, let's do this right here. I don't think I made no let me see. You put in my information here. Man, why it don't be? There you go. I'm like, you just want to clicking these little boxes. When I click these little boxes, it usually ask me. It usually take my put my information in automatically. verification code. Is that from me? Is that from what I'm doing right here? Oh my goodness. What did I do? I hit the wrong thing. I messed up. God dog it. God dog it, Tim. What you doing, Tim? What you doing? Timotheus. Rogers. Yes. Hate when I do that. Hate when I do that. When I mess up. Gotta go back. Make sure I ain't dox me. Yes. All right. Continue. All right. Continue. All right. Get out of here. Now it's gone. Text me something. Oh, I forgot all about what's the name. I done logged. I don't know. 7, 3. I forgot all about IG. All right. Complete purchase. All right. All right. It okay. Said complete purchase, but it had my information on there. So I took it off of there. I set that over there while that refresh. Because the other screen had all my information on it. So when I told it to go back, it's sitting there on the little white page. The little white page of death. But it went through. Another one that, yeah, it was paperback version. So that's just gonna be something that I ain't gonna read either, but I'm supporting my sister. Now,
Thank you very much.
now that we got that out of the way, I tell people all the time, look, man, I ain't gonna read it. I ain't gonna read it. But I will support you. The only book I read is the Bible. I ain't gonna hold you. And most time, I'm trying to listen to the audio version of the Bible. Like in my apps, it's got like where to read it to you. I'm not a reader. I like watching videos. Like I will watch a video all day long, but I'm not a reader. I know my limitations. It put me this side. I know my limitations. I am not a reader. Okay. Again, welcome to Facilitation February. Do me a favor, hit a like for the algorithm. If you're not subscribed to the channel, you know what to do. Click subscribe and turn your notifications on. Tonight, we have gone through the lingo. We've gone through open, high, low, close. We've gone through swing points. We've gone through order blocks. We've gone through fair value gaps. We've gone through displacement. Tonight, we're talking about internal liquidity and external liquidity, right? Internal run on liquidity, external run on liquidity. IRL, ERL, all right? So that's what we're getting into tonight.
Greetings, salutations.
All right, let's go full screen here. Make sure y'all can hear. Can y'all hear that?
However you said in your neck of the woods.
Can y'all hear the
I'd
volume?
like to welcome you to another episode of Le Art of Reading Price.
You said you can't?
I can't. No.
So we can't hear inside Zoom. Zoom can't hear the audio. You said Zoom couldn't hear the audio?
No.
All right, let me I think I know what I gotta do. I got to share the audio. Where's the advanced share computer audio? All right. Okay. I don't want to share the screen. I just want to go to the all right.
Salutations, House Kadavata, however you said in your neck of the woods.
Can y'all
I'd
hear
like to
them?
welcome you to
Can y'all hear it
another
now?
episode of Le Art.
Could y'all hear it then?
Yes.
Okay. I think, you know what? I think I might have fixed the other thing too. So, no, y'all probably don't hear that. No, y'all don't hear that.
Hello, my name is Timothy Leroy Singer, and I'm the creator of the Smart Money Manuscript. What Tim?
All right. But y'all do hear the audio over
Of Reading
here.
Price Action.
All right. We
Again,
cook with
I'd like to
Crisco
welcome
now.
you to another episode of The Art of Reading Price Action. And in this episode of Le Art of Reading Price Action, we will be talking about internal and external liquidity. Before we get started, I'd like to just say to everyone who's been reaching out to me asking how to join the mentorship, there will be a link somewhere to join. It's a dude. Let us get into Le Art of Reading Price Action. Internal and external liquidity. Now, how does price move? Price is always seeking liquidity and imbalances. That's all it's doing. It's moving around out there looking for liquidity and imbalances. Now, the way I understand liquidity is by using an analogy I like to call the box analogy. Well, Tim, what's the box analogy? Well, I'm glad you asked that question. Let me tell you what the box analogy is. Look over here. The box analogy. You know what? Before we do that, before I get into the box analogy, on the slides that is, I'm a visual learner. I learned visually. So let me give you a visual representation of what the box analogy is. Come on me. So this is a box. It's a Jordan box, but it's a box, right? So when it comes to price action, I like to use the analogy of a box because I'm a visual learner. Help me to see it visually in my mind. As price goes up, it's going to make a high, swing high if you will, and that's represented by the top of the box. As price goes down, it's going to make a low, a swing low, and it's going to be represented by the bottom of the box.
Now, what's on the outside of the box? Any PD array that's higher than the top of the box or higher than the highest high is considered external liquidity. Any PD array that's lower than the lowest low is considered external liquidity. Now, what can be inside the box? It can be fair value gaps, imbalances. It can be lower time frame swing highs and swing lows, because it'll be lower time frame liquidity resting above those swing highs and resting below those swing lows. So you have your box top, you have your box bottom. Anything that's on the outside of the highest high, let's just say a swing high, that would be external liquidity. Anything that's inside the box, let's say a fair value gap or a lower time frame high or low, that'll be internal liquidity. So inside the box, internal liquidity. Outside the box, external liquidity. And that's my box analogy. And oh yeah, ignore the fact that my shirt different. I didn't record these at the same time.
Now, let's get back into the slide, shall we? The box analogy. The highest high in the range is the box top. Remember, like with the Jordan box, the box top. And the lowest low in the range is the box bottom. So you got your swing high is the highest high in the range, and your swing low is the lowest low in the range. Highest high, lowest low. Okay. Buy stops above the range, that's external liquidity. Sell stops below the range, that's external liquidity. Imbalances that's in between that highest high and the lowest low. Remember the dunks, the red and white dunks that was in the box? That's the internal liquidity. Right? Lower time frame swing highs and swing lows. That's internal liquidity, because price is fractal. So you have lower time frame swing highs and swing lows in there, where it's going to be some liquidity resting.
You're muted. I'm gonna pause it there for a second, right? Imbalances are not liquidity themselves. You're looking for the lower time frame liquidity that's resting inside of the imbalances, right? I want to specify that, because I don't want people to get it misconstrued that an imbalance is liquidity. The imbalance itself is not liquidity. The fair value gap, the wick, the liquidity void, the volume imbalance, that's not liquidity itself. But if you have a hourly fair value gap, and if you go down into 15-minute, 5-minute, 1-minute charts, inside that hourly imbalance, there will be, or there may be, swing highs and swing lows that's in there, where the algorithm will attack that liquidity inside of that imbalance and then proceed on. That's where we get things like institutional order flow entry drills, where price will go inside of an imbalance, won't completely fill it, and then leave, and you will see it comes to a quadrant level of that imbalance, where when you drop down to lower time frames, what happens at those quadrant levels? Those quadrant levels are the bus stops. What's happening? The algorithm is creating high probability PD arrays at those quadrant levels. So it may be sweeping liquidity. It may be trading into an imbalance on the lower time frame. It may be doing a litany of things on that lower time frame, but the lower time frame liquidity rests inside those imbalances sometimes. So I just want to hammer that home. I don't want you to get it misconstrued saying, oh yeah, fair value gaps are liquidity. They are not liquidity. They are imbalances. Okay. And the algorithm will always seek liquidity and balance. All right. Hey Alexa, turn the living room lamp on. It's pitch dark out there.
Below and above highs and lows, or lows and highs. And here's the gag. On that time frame, that's external liquidity too. Stacks on stacks on stacks on stacks, layers on layers. Internal and external liquidity. The box theory. That's the easiest way I can explain it. Right? Now, when it comes to price moving from internal to external liquidity, price moves in a continuation pattern and price moves in a reversal pattern. In a continuation pattern or a trending market, price moves from a external liquidity. It'll take external, take buy stops. Remember the red and white dunks on the top. It go and it take those red and white dunks at the top or at the bottom. The buy stops or the sell stops. Then it retraces back into the range and attack a imbalance, fair value gap, if you will, lower time frame highs and lows. And then it trades back to the external, going back for more buy side or more sell side, depending on if it's going up or down. Now in a reversal, price moves from external to external. So just say we take sell side liquidity, then price retraces, but instead of retracing to the imbalance, it just blows through that bearish fair value gap and continues up and takes out the buy side at the highest high or that swing high at the top. That's a signature of a reversal. I know you're saying, Tim, you doing all this talking, but I ain't seeing no charts. Well, let's get into the chart, shall we? And now that we're in the charts, let me pull up my fancy dancy, follow the bouncing ball. Now, I want you to turn your attention to the price action over here. And we are going to focus on that swing high and that swing low right there. This is our price range right here. This is our price leg. In this case, this is a dealing range because we've taken out liquidity on both sides, right? So this is our dealing range. This is our price leg. But we're talking about internal and external liquidity. So this is the highest high and this is the lowest low of the range. Now, when price came down, what did price do? Price took out external liquidity because from this swing low to this swing high, this is external liquidity. So as price came down, it took out the external liquidity. And then once price took out this external liquidity right here, what did price do? Price moved back into the range to an imbalance, which is internal liquidity, right? So it moved, taking out external, moved back to internal. And as you see, it continued down. This is a continuation, right? This is price moves from external to internal, right? This swing low is external. This swing high is external. Then it moved from internal to external and just internal to external. So price moves from external to internal to external to internal to external, internal. Y'all get the picture. All right. That's a continuation pattern. Box top, box bottom. External liquidity, buy side, rest up here. Sell side, external liquidity, imbalances inside there. Internal, external liquidity. Now, let's focus on this external liquidity right there. Well, Tim, why do you want to focus on that external liquidity? Because that external liquidity right there, when we hit it here, price was telling us something. Well, what was price telling us, Tim? Let's go and see. As price came up, we took out external liquidity. We moved back to internal liquidity. Then we took out external liquidity. So price is in a continuation pattern, a trending pattern, a bullish trend here, if you will. But once price made this swing high, it immediately turned around and took out that external liquidity right there. So it moved from external, went through the internal, down to external. because from this swing low to this swing high, we took out external liquidity, creating an imbalance inside this range, inside this price leg, inside this dealing range here. We took out liquidity, we took out liquidity. So you got a dealing range here, a price leg here. It pushed through the imbalance, the internal liquidity, and continued down and took out external liquidity. That's a signature of a reversal. And as you see, price started to trend down as we saw.
The volume went out. I can't hear anything.
Yeah, my bad. Pausing it there. If we notice that fair value gap that we're pointing out there, we now know after getting further detail from Michael that right there is going to be an ICT inversion fair value gap. Why? Because that's the first imbalance that was created when we took off and took out that liquidity, right? Up here, it's our anticipatory reactionary point. That high is high. And when we reverse back down, got that break in market structure, created that inversion fair value gap, the algorithm comes back to that inversion fair value gap. Yes, we wick outside of it, right? But where do we wick to? We wick to the first fair value gap and some displacement after this turtle soup, right? Yes, we do have a fair value gap there, but this is the first one with displacement beyond this range, right? We went up, we came down, right? And that right there is the first fair value gap caused by displacement leaving that range, right? So we came back to that fair value gap, bodies respecting that inversion fair value gap before selling off, right? Back then, when I first put this out, we didn't have that clear understanding of an inversion fair value gap. Now we know how to identify what's going to be used as an ICT fair value gap, or as I like to say, a high probability inversion fair value gap. It's that first imbalance that's created off of that displacement going and handling some kind of business before you get that change in the state of delivery. Yeah, man.
Or earlier. So it's really simple today. That brings us to your favorite part. Let homework. I want you to go back through price and find examples of price moving from external liquidity, ERL, external range liquidity, that's what that is, to internal range liquidity, IRL. And I want you to do this on a 4-hour chart. Right? Go back through it, find it on a 4-hour chart, and then I want you to take notes on the 4-hour and on the 60-minute.
All right. That's the homework portion. Y'all see the homework? Please go back through and do the homework, man. Please go back through. Do anybody in the gang got any questions based off the internal and external liquidity? Remember, imbalances are not liquidity, but we can find liquidity inside of those imbalances on lower time frames. All right. Gang, y'all got anything for me? Nothing. Going once. Going twice. All right, that'll be it, man. I appreciate y'all for hanging out with me, man. Do me a favor, hit a like for the algorithm. If you ain't subscribed to the channel, you know what to do. Subscribe, turn all your notifications on. Y'all give it up for yourself, man, for pulling up. And, give it up for yourself, man. When I was moving my mouse around, was it making the desktop pop up on YouTube? Was the slides and stuff, was the video going away? Was the desktop popping up for those on YouTube? Because when I was moving my mouse, it kept like making my desktop show back up for me. Was it happening like that for y'all on YouTube? Mm-hmm. Yes, no, maybe so. Y'all weren't paying no attention. Y'all don't care. Okay. Okay. All right. Okay. Okay. Appreciate it. Oh, somebody said no. Okay. All right. All right. All right then. So tomorrow, what are we getting into tomorrow? Let me check what tomorrow's lesson is going to be. I'm so used to doing this in Zoom. I keep trying to hit my shortcut. Tomorrow, how to study price. Okay, we're we're getting into how to study price. That's not a PD array. I can't remember exactly what that is, but we talk about how to study price. So we're gonna see what that is tomorrow at 8 o'clock. How to study price is the lesson. We'll be here tomorrow, same bat time, same bat channel, 8 p.m. Eastern Standard Time. I'm right here for lesson number 7. Today was 6, right? What's today? 6. Yeah, I think today is 6. So we'll be back tomorrow for lesson number 7, how to study price. Again, if this first time tuning into Tim's Tidbits, please allow me to say welcome and allow me to say thank you for tuning in. Right? If it's not your first time tuning in to Tidbits, y'all know what it is, man. Y'all know what it is. Thank you. Until the next time I decide to get on Al Gore's internet, man. It's your boy, Timothy Lee Rogers Sr., a.k.a. Rania Grande. That should be a big spot if you don't hablo Espanol. Y'all be safe out here in these trading streets, man. I'm gone.